China's semiconductor industry has been a topic of intense interest in recent years, as the country seeks to reduce its dependence on foreign-made chips and establish itself as a major player in the global market. The industry has also become a focal point in the US-China trade war, with the US government imposing restrictions on China's ability to manufacture and purchase advanced chips. Despite these challenges, the latest economic data from China's National Bureau of Statistics, NBS, suggests that the country's semiconductor industry is making a comeback. The NBS recently published data indicating that China produced 29.4 billion units of integrated circuits, ICs, in March, down only 3% from a year ago. This is a significant improvement from the 17% year-on-year drop in the first 2 months of the year. The March IC output also marked the largest monthly production since December 2021, suggesting that China's chip output is recovering. It is important to note, however, that the NBS adjusted its headline growth data to reflect changes in the companies included in its samples, which could create small inconsistencies. For its monthly reports, the Bureau tracks businesses with an annual turnover of above 20 million yuan, $2.9 million US. The agency explained that new enterprises are added to the sample every year, while some existing ones are removed. This means that while the first quarter saw a 14.8% year-on-year drop in China's IC output, a comparison with past figures showed only a 10.6% fall. The US government has been tightening its export controls since October 2021, restricting China's ability to manufacture advanced chips or buy them from abroad. This was followed by the passage of the Chips and Science Act in August, aimed at countering China's microchip industry and boosting domestic chip manufacturing. However, China has been doubling down on its self-sufficiency drive to increase domestic output of microchips and reduce its reliance on overseas products. In fact, IC imports fell to 108.2 billion units in the first quarter, down nearly 23% from a year ago, according to Chinese customs data. A recovery in IC output is in line with a broader improvement in China's economy, which expanded 4.5% in the first quarter, according to the NBS. The Bureau also noted that 26 out of 41 major industries maintained year-on-year growth after the country abandoned its zero-COVID policies late last year. Meanwhile, the Asian Development Bank predicts that the semiconductor market should bottom out by mid-2023, with new trends such as growth in electric vehicles likely to drive demand in the sector. Overall, the latest economic data from China's Statistics Bureau indicates that the country's semiconductor industry is showing signs of recovery, despite efforts by the US government to hinder its progress. While the NBS's data may be subject to small inconsistencies due to changes in the companies included in its samples, it is clear that China's IC output is narrowing the gap with last year's figures. The Chinese government's self-sufficiency drive seems to be paying off, and the broader improvement in China's economy is also a positive sign for the semiconductor industry. The outlook for the sector remains positive, with new trends such as electric vehicles likely to drive demand in the coming years. However, it remains to be seen how the US-China trade war and other geopolitical factors will shape the industry's future. Would you like to see more videos? Make sure to leave your opinions in the comments. Like this video if you enjoyed it and subscribe.